and you're listening to The Business Show, and it's 12:43, and it's with great pleasure we welcome Rob Lees to the show from Mortgage Choice Blue Mountains in Penrith, and we're going to be talking about the important topic of personal insurance. How do you define personal insurance, Rob, and why is it necessary?
Well, personal insurances insure you, the individual, against serious illnesses, serious injuries like permanent and total disability and death. And the reality is that while we hope these things don't happen to us, if they do occur, they can place enormous financial hardship on individuals and particularly families, particularly if the person who gets sick or passes away is the main earner of that family. And that's why we need them. I guess the only times you don't need those insurances is if, for example, you're a young person living at home with parents and you've got no liabilities. You probably don't need personal insurances. Or maybe at the other end of life, when you've paid off all your debts and you've got assets behind you, you probably don't need it either. So in that case, you'd say that you're able to self-insure. So if you're not in an asset position where you can self-insure yourself, you really do need personal insurance in case something goes wrong. And I suppose my reason for talking about this, often when I think about what I'm going to talk about, it's usually because of things that are happening or I'm involved with clients during the week. And I had a call from one of our clients. It was only 2 or 3 weeks ago. No, it was an email, and it just threw me and upset me terribly because this lady, lovely family, her husband had passed away. He had a heart attack at 42 years of age on a motorbike, and she
had
emailed.
A heart attack while he was on the bike.
Yes, on the motorbike,
wow.
And their daughter was on there, and she was okay, but.
Oh,
it was a terrible,
on the Mulgoa.
Yeah, it was a terrible
I
situation, and they were going to get some advice on their insurances, and they were working with them for a year to buy a property. They bought this dream home, and our financial planner. Yes. So our financial planner rang them January, and they said, "Look, there's too much going on. Can we leave it for 2 months?" So they hadn't reviewed their insurance, and it just, I tell you what, because this has happened, it's upset me so much. It's just given me a new, I suppose, motivation to talk about this and the importance of it, because we hope it won't happen. But if it does, it can place us in a very difficult financial situation.
This is the thing, isn't it? People, it's like a dirty word. People don't like to talk about it because then I might have to actually think about what would I do, and I'd rather just think about, the fact that we're all going to be here and we're all going to be healthy. But unfortunately, and I think that age demographic that you mentioned, that 42, that it's it's almost like it's not an invincible age. I think we know that we can be subject to things because we've all got stories, but we tend to put blinkers on because we're so busy, because you're just busy doing, we generally, in this age bracket, we're working full time. We might have young kids, we might have older kids, so they're keeping us on the toes constantly, and it's not seen as a priority.
And look, it costs money, and it's not upbeat.
And it doesn't give you instant gratification. Insurance,
no.
Sometimes it's what I call a grudge purchase. Right?
It is
because there's no immediate gratification or pleasure with it.
Absolutely.
And you're right too. It's not seen as a priority, and people, particularly in that sort of late 30s, early 40s, they still think there's lots and lots and lots of tomorrows. And life is so very uncertain.
And usually there is, but occasionally things happen, and we don't know. And that's the reason for it, really.
And there's only one way that you can plan for that, isn't there?
That's right. And it just puts so much at risk, and so I think particularly at that stage of life, you do need these insurances.
So, Rob, what kind of personal insurances are available for people to, sort of try and mitigate that risk?
Sure. Well, the one we've just talked about, a death benefit, which is a lump sum if you pass away, or in some cases, a lot of the insurers actually have a condition of release if you're diagnosed with a terminal illness too, under those policies, or a total and permanent disability insurance, which is, I always say, I prefer to get a death benefit than that one because you're so badly disabled that you probably wish you were dead.
Yeah, but, your quality of life has been really impacted.
It can be very expensive, and again, a big lump sum that normally is about the same as a death benefit. Then an income protection insurance, which really your greatest asset is your ability to earn an income. So if you get sick or injured and you can't earn an income, what are you going to do? So an income protection insurance can protect your income up to 75% of what you're earning now, and can be a benefit that goes on to the age of 65. I've had a claim on income protection. 2009, I had bad sciatica, and I was doing a lot of cycling, and I came back from a 1,400 kilometre bike ride and wound up in hospital a week later, and I had to have back surgery. So I was off work for several months, and I put in a claim, and it took the pressure off having to return to work. I pay for my two son-in-laws to have income protection because I believe in it so much, but I'm actually protecting myself, because if something happens to them, who are they going to come to help out?
That's right.
So and one of them's a tradie. It's so important to have these insurances. And the other one is a trauma insurance, where if you suffer a traumatic event like a heart attack or a cancer, stroke, and there's other illnesses listed, there's a lump sum payout, and that gives you choices for treatment, and also perhaps makes up the difference between that 75% of your income with income protection and what you might normally earn.
Yep. Yeah, so there's lots of options that are available that obviously you need to have a conversation with somebody who can talk through those options.
That's right. I should mention too, there are mortgage insurances as well. So people have home loans, so it's a quick sign up, but they're not underwritten. They can be expensive, but they are a quick way to get insured if you've just got yourself into debt.
And can you just clarify, because I have a little bit of inside knowledge, you mentioned there mortgage insurance. Do you just want to cap on the difference between actually a mortgage insurance insisted that the customer take via the bank as opposed to a personal insurance?
Sure. Well, a mortgage insurance still, if it's a mortgage that insures the individual against death or and in some cases some traumatic illnesses, the problem with those is there's no underwriting, there's no medicals done, so there's no risk assessment, so they're going to be more expensive. And also there's you're not covered for pre-existing conditions, so you're not always sure what you are covered for. But to actually make sure you're covered, they're the easiest way to get signed up. But I think it probably should be reviewed if you do have one of those. Yeah.
We tend to refer to it as, just to clarify the differences, we call it debt protection.
Sure.
Because mortgage insurance, people think if you've got a mortgage insured loan because you've had minimal deposit, then I'm okay because I've got mortgage insurance.
Lender's mortgage insurance, which covers the lender. So it still is a personal insurance that covers your debt.
Yes, most definitely.
Rob, how expensive, relatively speaking, are the various forms of personal insurance, and how can you make them actually more affordable for you?
Well, I guess the premium depends on the risk. So the older we are, the more at risk we are of dying or getting ill. So obviously younger people don't tend to get ill and statistically aren't going to die as young. So the older we are, the more expensive it's going to be. Also, if we've got pre-existing conditions, and sometimes they'll exclude those on the insurance, so they'll put a loading on it, or there might be lifestyle type things that will, like a smoker. Normally a smoker's insurance premium might be about double. I've had clients when I was a financial planner who actually gave up smoking when they saw it was going to cost them double for their insurance policy. Also,
chances are
your employment, so high-risk employment, generally speaking, office workers don't pay as much as the tradies. There's more risk of claims there. So there's a whole lot of risk factors that will determine whether you pay more for your insurance. The way to save money, I guess, is that particularly when you're young, the insurance premiums the insurance can be packaged within your superannuation. So you're not seeing it come out of your bank account. Probably not as good when you get older because the premiums are generally higher and you want to save for retirement. But if it's at a stage of life where money's tight, it's probably better to have the insurance and have it in super than to not have it at all. Also, you can get what's called a level premium policy. Normally, most policies are stepped premium, so they go up. They're stepped as you get older. But a level premium is a bit like a fixed rate home loan, Peter, where you lock in at a particular level, particular age, and only goes up with your income and with CPI, but not by age. So I've got a level premium in my income protection. so it's still affordable well into my 50s.
And if you get in when you're younger, then it might be a little bit more expensive at the start, but when you get into your 50s, then you're like,
that's
cheering.
right. So there's strategies there, and there's a lot of information. It's really hard to do this online. So there's all sorts of options with these policies.
And I think one of the objections that we get a lot of the time is around, I've got cover in my super, which is great, but I guess what people need to understand is make sure that you've actually got what you think you've got
the right
inside
cover.
your
Most
super.
people don't know much about that cover.
No.
Income protections might cover you for 2 years, and it might be only $30,000 a year, or the death benefit might be $100,000 or $200,000, and you've got a mortgage of $500,000. So to have it properly reviewed, and I'd thoroughly recommend advice because they're very complex, and you want to make sure that what you need is there if you do have a claim and you do need it.
And Rob, you're a credit advisor, which means that if I understand it right, you are actually not able to have these particular discussions around what a client's needs were, but you actually have a financial planner.
Yeah, that's right.
That
So I'd have general discussions with people.
Yep.
I've been an advisor, but now we have Tim, who's part of our team, who's an accredited financial
But you've
advisor.
obviously got a lot of knowledge because you mentioned before in your financial planning business.
So I've done that, but I don't do it now. Tim looks after all that, and he can certainly give advice on these sorts of things. And he's up to date on how it all works now.
Yeah. And that's the main thing, isn't it? Just have that conversation because
absolutely.
It's not a nice subject to discuss, but this poor lady that you mentioned before, the last thing you want to be dealing with, in my opinion, is financial hardship when you've got your own
on top of bereavement.
That's right.
Which is hard enough, but then to be dealing with financial hardship as well, it's very difficult.
It is
especially when
sad.
they sort of, we're going. They said, "Oh, we were thinking about it." We're thinking about it.
Yeah, that's right. Really rattled me.
Can I tell you a personal story? I too used to actually write the actual risk insurance within our business, and I stopped doing it for that very reason because I found that too many people were, we'll get to it, and I actually struggled to sleep at night. And in our game, I think if you're not looking after your customer first and foremost, and you can't sleep well at night, then there's an issue. And I really found that because I was having the conversations, people could see and understand that they needed it. But people are just they just don't see it as a priority. And I actually felt that I couldn't take that responsibility anymore.
Sure. Yep.
So I think having somebody in your office that can look after that and sort of maybe push the issue, and you certainly don't want to. You just need to have those conversations.
Right advice. Yeah,
absolutely. All right, Rob. So what about your advice for those who do need to review? How often should they review it?
Just get the right advice.
Yep.
That's basically it. Just get the right advice.
Yeah.
You can go online and do all sorts of things, but there's so many features. I mean, tradies can tick a box and have 3-day cover which is really important, so you don't have a waiting period. So there's all sorts of features with these things, and to actually go to someone who knows how it works is very, very important.
Can understand and give you the right advice, because there's a lot of companies too that advertise on TV.
Yep.
Just make a phone call and have your family covered. I guess maybe if you...
It's better than nothing. It really is better than nothing, but to do it properly, get the right advice.
Yeah. That's great. I think that's great advice. Without a doubt, get the right advice and make sure that your family's going to be protected.
Absolutely.
Yeah. Thank you, Rob.
My pleasure.